Welcome to Divas Two Cents, where we take complicated matters and we just break them down for the masses. You know, we air every Wednesday at 6 p.m. on Central Time. So if anything that we discussed today resonates with you, please share it. Share it with your friends. Share it with your enemies, because even they can utilize some tax tips, okay? Today, I am very pleased and happy to introduce to you another tax strategist that is a colleague of mine who has been around for for the past 15 years of experience in the tax business industry. And I think you're going to find it very interesting. For the past couple of weeks, you've been hearing me talk about tax strategies, either for the W-2 employee or for the business owners. I've brought you, last week, I think we had Terry Peters on discussing mineral rights. So we're talking alternative assets. And now we want to introduce to you something really special. I think you're really going to like this. Let me introduce to you, without further ado, Mr. Dwight Dye. Dwight, how are you?
I'm doing great. How about you?
Good, thank you. What is it that you talk about? What is your expertise? Because I know what it is, but I want you to tell the audience.
Well, like you mentioned, I've been in the tax industry for 15 years plus, mainly tax preparation over 10 of that 15. And about 5 years ago, I realized that I was kind of doing this service to a lot of the clients, just spitting out a tax return, letting them know how much they owed every year or what their refund was, whatever the case may be. And about 5 years ago, I shifted to tax planning and helping clients keep more of what they earn, as opposed to send it to the government. And a couple of years ago, I've had the highest tax on liability I've ever had. And it kind of caught me off guard. You know, I'm sitting here helping people save money on taxes and forgot about my own situation. And so I promised the next year that was not going to happen. And I stumbled across the equipment leasing strategy. And as soon as I heard about it, I knew that personally that's what I wanted to use, but also had some clients that would be interested in it as well. So we had good success with it that year. And then this past year, 2025, I became a referral partner with the equipment rental platform. And I focused on helping other people, helping people that, CPAs, enrolled agents, tax advisors who have clients that could benefit from this strategy. Since I'm a referral partner, they need to come through me to have access to the platform. So that's what I did last year, and we'll continue to do this year, 2026. So thanks for having me on, and looking forward to talking with you.
Yeah. So for the audience out there, okay, we talk about equipment leasing, okay? So you're wondering, well, what does equipment leasing have to do with tax planning or tax strategizing, or even with you? So is it for individuals, business owners? I mean, let's start from rock bottom, because this is for relatively new, is it not?
Well, the platform itself has been around for 10 years, but what we're doing here is we're buying assets that you can depreciate, and then using that depreciation to help offset whether it be your W-2 income or your business income. So I'll back up though and say, whether you're a W-2 employee, a business owner, or even somebody that has sold a business or sold real estate looking to offset capital gains, this strategy can be used for them. And in essence, what the people are doing is setting up their very own short-term rental equipment business. So it's not like we're trying to create something fictitious. It's a legitimate business. They form an LLC to purchase the equipment through, and then there's some active participation required on their part, because if we're trying to offset active income, they need to participate in the activity in order to use the losses from the depreciation to help offset their W-2 income or business income. So that's ultimately what we're doing. We're setting up a business, and W-2 employees, they have it the worst. They don't have a lot of deductions that they can take to help minimize their W-2. So this gives them an option of setting up a business, because the tax code incentivizes business owners, and now they've got assets that they can at least on paper, show a loss and go against their W-2 income.
Oh, okay. So a W-2 employee, let's start at that end. Because I look at a portfolio, or I look at individuals' tax plans, and I look at it from the the COLA trifecta perspective. So I look at ordinary income, and then I look at the passive income. So what you're saying is, in order to take some of those losses that you may have throughout the equipment leasing, in order to be able to offset the ordinary income that's being generated either by the W-2 or by another income, another business they may have, they need to take those passive losses and be able to convert them to be able to take them off on the other side. Is that what we're talking about? And that's why they have to form a business?
Right, because you can use this passively if you have passive income you're looking to offset. Typically, most people are, their active income is higher than their passive. They're making $500,000 on their W-2.
Right.
So they're looking to offset that active income. So by starting this equipment rental business and meeting some, real minimal activity, that causes that business now to be active, and we can use the losses to offset the active income.
Okay.
Because you got to have active to offset active. You can't be passive and
Right.
offset your active income.
Right. So similar to like rental, like the rentals, you
Just like short-term
short-term rental loophole, right? Okay. Oh, okay, good. All right. So let's talk about what kind of an investment. Like, let's say if someone calls up, I have a client, let's say, and the client's gonna have a tax liability of anywhere from 30, 40, 50, $60,000, or even $100,000. Send them over to you, and then you get them set up where they set up a business for the equipment leasing. I mean, how difficult is it to get into it?
It's not difficult at all. The first step would be for them to form an LLC. I'm not an attorney. I practice tax, so
Right.
I'm not going to set their LLC up for them. They can do that on their own, or through their tax advisor if they have a resource. But that would be the first step. The next step would be determine the amount of the equipment that they need to purchase for their particular situation. So this year, there's a minimum purchase of $500,000 for new buyers.
Okay.
So
Okay.
once you've met that minimum, in the future years, you can buy as little as you need.
Okay.
But the first year, they do have a minimum, that you have to meet in order to get in on it. So to buy the $500,000 of equipment, they would put 10% down, so $50,000. And then the equipment rental platform charges a 3% platform fee. It's a one-time fee per purchase, so that would be another $15,000. That is a deductible expense to their business, so it's not like they're out that money. They were amortize that out over the 6 years of the program. But the reason I like this strategy so much is the use of leverage, because now we're going to borrow 90%, and you're 10xing, your capital versus the amount of deductions you can take. So for $50,000, I'm going to be able to deduct $500,000. So a lot of the strategies that we help people with are good foundational type strategies that everybody should be doing anyway, like hire their kids or the accountable plan, things like that. But those only get you so far. You need a more powerful strategy, if your tax liability is $50,000 or higher. The accountable plan isn't going to get you, far enough to really make a dent in that 50,000.
Okay. All right. So, for example, if I have a client that has a $50,000 tax liability or upcoming $50,000 tax liability, and because we're tax advisors and we look in the future versus looking at the rearview mirror, I can say, okay, you're either going to give the government $50,000, and I'm always saying, don't give it to the government, give it back to yourself, because you worked hard for this $50,000, right? So you put the money in your pocket, you're going to take it out of your pocket, and instead of giving it to Uncle Sam, you invest in this type of tax strategy called the equipment leasing. And the way you do that is you're going to leverage those $50,000 to buy about $500,000 worth of equipment, of which then you're going to enter into an agreement where you're going to lease that equipment out. And that's where you'll be able to take the losses of, right? You're going to take the whole loss and you're going to have a good return. Now, mind you, we're not attorneys. Now, like you were saying, Dwight, you're not going to do that. But as the tax advisor, my network of, I have attorneys, I have all kinds of people around us that then we would, as tax advisors, facilitate that with you and allow you to be able to start that company or that LLC or whatever it is you're going to create, so that you can start the equipment leasing as a legitimate business that's going to offset that tax liability. And instead of giving it to Uncle Sam, put it back into your coffers for your generational wealth building. Did I kind of summarize it?
I'll tell you what, why did you need me on here today?
Well, I want to make sure that it's clear. I want to make sure that it's really, really clear, because I've been dealing in the accounting world for many, many, many years. Taxes, many, many, many years, right? And I've never really delved into equipment leasing. As a matter of fact, full transparency, I hadn't even heard of equipment leasing until last year when it first started coming out. So I'm sure there's a lot of my audience out there that is not familiar with it. Now, mind you, I'll also get calls, and don't call me on this, okay? But I'm also going to get calls on people saying, well, wait a minute, $50,000? Where am I going to get 50? I don't think I have a $50,000 tax liability. And that's okay, because there are other strategies for you. You don't need to have this one. This one in particular is for someone that has a high tax liability coming up, that they can offset it. Right?
Correct.
Okay. So,
yeah, and I just wanted to mention, people are like, well, I don't know anything about renting equipment. I don't know anything about how to run this business. Well, I didn't either 2 years ago. If you'd asked me what a telehandler was, I would have had no idea what you were talking about. But now I own a few of them. So with the equipment rental platform, they make it easy for us to get into this business. And they already have a master lease agreement with a company that's going to rent your equipment for you. So you don't have to worry about finding that end user. That company is going to rent your equipment. They're going to maintain it, or do all the repairs and maintenance on the equipment. And your equipment then gets entered into a revenue sharing pool. So as long as other people's equipment is renting, we all share in the revenue. It doesn't matter if our specific equipment rents or not. So I like that as well. That's a good feature. And, we do have access to a dashboard where we can see how our equipment is performing. But, it really doesn't matter, because we're going to receive the same amount of income each month, as long as, the master rental company continues to hit their targets. And so far, over the course of the 10 years of the program, they've always paid what they're supposed to and not let anybody short.
Okay. And I'm sure that's all in the disclosures. And is this something that you need, let's say, like, if I went to buy, and only because I haven't been into this, okay? I'm getting into it now with my clients, but I'm new at this. So I'm asking the questions that I'm thinking my clients are going to be asking of you. So let's say, for example, you mentioned the maintenance. So you know how some of our clients, they don't want to go into real estate. They don't want to buy a rental because the first thing they say is, I don't want to unclog toilets, right? Although they don't have to, because they have a management company that'll do that for them. So is it similar to that, where I buy all this equipment, I know it's going to be leased, but somebody else is going to maintain it?
Right. The company that rents it out, every time it comes back from a rental, they go through a checklist. They want to make sure that no damage occurred from the previous renter. So they can hold them responsible if it did get damaged. And then they want to make sure that the person who's going to rent it next doesn't have any issues with the equipment. So I visited a location down in Jacksonville, Florida, a few months ago to check on my equipment. and that's part of the participation in the business is to go check on your equipment. Plus I had a deductible trip now to Jacksonville. So I went and I was very impressed by the location. I met with the manager for about an hour and she walked me through that checklist, and it was pretty impressive, that they take the time to do that on every piece of equipment that comes back. So if there is something, they go ahead and fix it and get it ready for the next renter. You would never even know anything was wrong with it because they just take care of it for you. And then a lot of people are concerned about the insurance. What happens if it does get damaged while it's out on rent? Well, when the customer comes in to rent the equipment, they have to show that they have insurance that would pay for the equipment if it were to get damaged. And then, like all rental companies, they sell their own insurance to cover the equipment. So if something were to happen, it'd be covered under either the customer's policy or that extra insurance that's sold to them. Our LLCs, though, are added as an additional insured to the equipment rental platform's policy. So we do have insurance for that equipment through the equipment rental platform.
Oh, that's really interesting. Wow. Okay. So what kind of objections do you get from tax advisors that are going to be going to get into this for their clients? What kind of questions or objections or
I think the main thing is people think it's too good to be true. Am I really going to get my rental income every month, like you say? And I'm also an equipment owner. I don't know if we can disclose that, but yeah, I did at the opening. So for the past 2 years, I've bought my own equipment. So I can attest that every month to the penny, the same amount hits my account for rental income. So that's what makes people nervous because they are taking out a pretty sizable loan that they are responsible for. So they want to make sure that they're going to have the income to pay it. And so far, everything, the 2 years I've been a part of it, it's worked out. And it's a 10-year program at this point. And over 10 years, if they had a track record of not paying, what they were supposed to, they would be out of business at this point.
Yeah. Do you know if it's been vetted yet? Has anybody been audited that those type of equipment leasing companies have been audited?
Well, there's really nothing from an audit standpoint to worry about because all we're taking is depreciation, which is perfectly acceptable in the tax code, and it's encouraged by the IRS to depreciate your assets.
Right.
So it's not like we're doing some sneaky kind of strategy that could be illegal. So there's no need for an opinion letter or anything like that, which some strategies come with. Some strategy even offer audit protection from the beginning, and that should be a red flag. Why do you need to offer audit protection on your strategy? But from my understanding, they have had people audited, not for this, just for something else that's on their tax return. And, of course, when they audit the tax return, they can audit the entire tax return, not just what they're looking for. And each of those audits, I think there's been a handful. This particular strategy has always held up. But, we are trying to make this an active business. So I recommend people keep a log, just like you would if you're trying to be a real estate professional or the short-term rental loophole. Document your hours, even minutes that you spend in the activity, because what we're shooting for is 100 hours at the end of the year for our participation. And as long as you keep up with that, and if the ever were to be questioned, that's your proof as to the time that you spent and the activities that you did.
Yeah. Well, where do you see this industry going in the next maybe 5 years?
Well, as of 2024, the equipment rental business is a $60 billion a year industry. So with all the growth and construction, I mean, you can just drive down the street of any decent city and see construction projects. And at least I do now that I own equipment, because I'm observant to that type of stuff. I'm like, okay, well, there's a telehandler. I own one of those, and a scissor lift, but you see it all over town. So it's a growing industry. The master rental company that we've partnered with currently is the fourth largest company in the country. So it's not like we've partnered with a Billy Bob's equipment rental down the street. This is a company that has over 300 locations around the country. And they've been in business the same time as the equipment rental platform for about 10 years now. And they got a big announcement that I'm probably not privileged to say at this point. But they've got some big news coming in the next month or so. So it's a good opportunity for people to get in on. Plus, with the rental income, it does cash flow a little bit each month by the time you've paid your loan payment. So you do have a little bit extra left over, you can do other things with. And my advice is, now that we've saved money in taxes, let's use that to build wealth with. So let's find real estate or some other investment to use those tax savings to continue to build wealth, because this is a 6-year program. So you've got about 6 years where you can invest that money that would have gone to the IRS. And we've all seen over the past year how our tax dollars have been wasted. We can do a lot better investing that on our own.
Yeah.
And get a better return.
Yeah. Unfortunately, our tax dollars don't all go to schools and roads.
Hey, if they did, I won't have a problem with it.
No, you're absolutely right. Well, this is really good. Thank you so much. I really appreciate you coming on and explaining it. Like I said, I am new to this as well, so I need to understand it further and get involved myself. I like to when I talk about a strategy, I like to have vetted it. I like to be able to do it so that I understand it as well. But it seems like a no-brainer. Why give it to the IRS when you can keep it for yourself, for your, build that generational wealth that you were talking about, so for your children and the children's children, so to speak. So thank you so much. How do they get a hold of you?
Well, if they're listening to this podcast, I would recommend them just coming to you. That way you can refer them on to me. I do have a lot of information at dwightdye.com. I went all in on this strategy last year. So I've decided not to work with any individual tax planning clients last year, other than the ones I was currently working with. I just didn't take on any new ones. And I've partnered with people like yourself that do have clients that could benefit from this. So you can go to my website, but ultimately I want Diva to get credit, or I want Diva to have the client come through her. So just reach out to Diva, reach out to you, and make the connection, and we'll help them out together.
Oh, okay. Okay, no problem. And again, as I mentioned, I will always be that connector for whether you need the attorneys to set up the LLCs or whatever entity you decide you're going to get into, and then connect you with Dwight as well, and see how this equipment leasing can be another avenue, another way that, like Dwight said, the tax code is there. There's so many nuggets in the tax code that help you. I know people are afraid of the IRS. I know people always say, oh, the boogeyman is coming. But you know what? It's not fair that only the rich or the wealthy or the 1%ers or 3%ers know all these strategies. These strategies should be not only for them, but also Main Street America. And that's what we're here for. We're here to let's spread the wealth. Let's everybody know that it's available, whether you take advantage of it or not, but it's available. So reach out to either myself, and I have no problem if you reach out to Dwight. I'm sure, I don't think he's gonna take individual clients, but just reach out to me and I'll make that connection for you. How's that?
Sounds like a plan.
All right.
Thanks for having me on. Enjoyed it.
Well, thank you. Thank you very much. I really appreciate you. Okay. And for you guys out there, don't give the money to the IRS. Give it to yourself, okay? And that, my friend, is going to be Divas 2 Cents. I do have one announcement. January 26th through the 30th, I'm going to have a 5 moves to retire challenge. So between 2 and 3 o'clock Central Time, I'm going to put in the comments, I'll put the links and all that other good stuff so you can register. And how much is it going to cost you? a whole $29. And the $29 is not even coming to me. I don't want your money. I don't need your money. I've been there, done that. I'm going to take those $29. And as you know, I was always hungry as a child. So hunger to me is dear to my heart. So I've earmarked those $20, your $20, to go to the Open Door Mission here in Omaha, Nebraska, where they help the homeless and they feed the homeless 3 meals a day. So help me help them. And at the same time, 5 moves, I call it 5 moves to retire, and it's 5 days, an hour a day, different strategies, more to come. Take care, and that, my friend, is Divas 2 Cents.
Recordings